Helima, I have a totally different question. I don't know if you saw earlier in the show, we were talking about this Brett Stevens column this morning. We were talking about what Putin's endgame is. And Brett posits effectively that this whole conflict is actually pre-planned and is actually all about energy. You believe that?
I mean, look, I think that Putin has a broader plan than energy. I think it's about basically reconstituting his sphere of influence. I think what we should be paying attention to is he looks like he's basically trying to rebrand some of his military losses as diplomatic concessions. There's no indication right now that this war is anywhere near an end game. And so I think market participants really have to think about these sanctions that have been placed on Russia being long term, that we're going to potentially see more disruptions of Russian energy. Amos Hochstein, President Biden's special energy envoy, in Dubai this week said we've already lost 2 million barrels of Russian exports. I think those also are going to climb. I think this conflict goes on.
And when you say it goes on and is long term, are you talking about multiple years, decades? What are we talking about here? Because we also were talking earlier in the program about, is there a way for Putin to come effectively back onto the scene in Europe if somehow this all stopped tomorrow, which I don't think it is?
I mean, look, if Vladimir Putin removes his troops tomorrow, I don't see any willingness on the part of Western powers to roll back sanctions after he's caused a massive refugee crisis. 4 million people are now displaced from Ukraine. You have potentially thousands dead in Mariupol. I just don't see this country getting out from under sanctions anytime soon unless there's a change at the top in Russia.
Okay, so if that's right, we're looking at WTI crude on the screen right now at $106, basically, $107. What does that look like to you come Christmas?
I mean, Andrew, what I think we have to think about is, do Western powers intensify the sanctions pressure? Right now, Russian crude is essentially unpopular because of a buyer strike with banks and shipping companies and energy companies saying, we won't touch it. But major consumers of Russian crude and gas are still taking the product. The big question is going to be, does Putin do something in terms of escalation that makes Russian energy unavailable because of potentially secondary sanctions from the United States that would force countries like India to cut their imports? Do you see Germany essentially saying, we have to restrict Russian energy imports? Right now, continental Europe is really reluctant to turn off the Russian taps. But again, if Putin escalates, if he were to use chemical weapons, I think we're going to have to see further economic sanctions and efforts to defund Putin's war machine by cutting off his energy prices.
Okay, so we've now walked through the various permutations of what could happen. Walk through the various permutations of what you think happens, therefore, to the price of WTI.
I mean, look, I think we have to prepare for higher prices. The question is, will we retest the highs that we've seen in the past couple of weeks? I think that will depend on how Putin wages the war. One thing we're not likely to see is additional volumes coming out of OPEC. They're having a meeting tomorrow. There are no indications that OPEC is willing to go beyond the 400,000 monthly increase they've already agreed to. And we also have a question about how much more oil is really out there from OPEC producers. The estimates are that potentially they have 2 to 2.5 million barrels that they could easily bring onto the market. If Russia is down by 2 million already, and that is going to climb, there's a question about where the available barrel is going to come to fill this hole.